Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at the continued rally in gold and ASX gold stocks to watch. Physical gold continues to hold near records amid expectations of a rate cut from the US central bank this week and geopolitical woes, which are driving demand for safe havens. Spot prices have risen about 5% already so far in September and are up around 40% so far in 2025, on pace for its best year since 1979. In the latest surge, the precious metal eclipsed its inflation-adjusted peak from more than 4 decades ago, when gold hit $850 an ounce, extending a 3-year rally fueled by mounting concerns over the US economic outlook. Analysts bullish on further upside for gold, with Goldman Sachs recently suggesting gold could top its most bullish peak of $4,500 an ounce if private investors continue to diversify into the metal, along with increased central bank buying.
Everyone wants to play gold at the moment.
Yeah.
It's funny how it's gone from no friends to lots of friends. You can still play it through the ASX, we think is preferred right now. The ASX has underperformed the offshore markets. We see more value in the Aussie market.
The world's largest gold miner, Newmont, has risen an impressive 95% year to date, and shares remain in a strong bullish trend, according to ASX TradeWatch data. However, there may not be too much further upside, with the average broker target around $109 a share, suggesting the shares are currently around 8% overvalued. At the smaller end of town, several other stocks are shining bright. Falcon Metals, a Victorian gold miner spun out of Chalice Mining, is up 670% year to date and soared in July, following a high-grade gold intercept from its Blue Moon prospect in Victoria. ASX TradeWatch data shows shares in a strong bullish trend, with the 5-day moving average of the stock above the 50-day and both the 20 and 200-day moving averages trending higher.
Metals is in Bendigo. Their first drill hit was absolutely spectacular. They've got one drill rig on site. They have another one planned. And so if they sort of hit that mother lode within Bendigo, which is being shown to be a very high gold producing area, I think this can shoot up here. It's trading about 192 mil market cap. I think it goes to about 500 just based on the cash that they've raised.
And Jonathan Tagadina at MPC Markets is also bullish on Golden Horse. Now, shares are up more than 145% year to date and over the past 12 months. It's also delivered impressive drilling results recently at its Hopes Hill project in WA. Shaw & Partners also recommends it as a speculative buy.
Did a cap raise at 40 cents and it's shot up higher. And it's actually caught the eye of Shaw & Partners, so they've initiated coverage. And one thing that I will highlight here is that there's a bit of a volume spike here. And I actually talked to the guys at work. I'm like, that's a fairly big volume spike. I looked through it and there was a crossing done at in the low 50s. And I was like, okay, there's some activity here. It didn't actually show up in the news, but then you can just see it's popped up since then. And it's actually traded at 58 cents. So Shaw & Partners recommends it as a buy, a spec buy, and they have an 81-cent target. So it's another 25% higher.
Meanwhile, Gold Road Resources may have hit a snag in its golden run, shares falling at the start of the week amid news it's flagged lower production at its flagship mine, a week ahead of its planned takeover by South Africa's goldfields. Yet shares have risen more than 110% over the past 12 months.
I've written that gold is mercurial, but I'm not sure that's the right term, but it's certainly, it waxes and wanes in terms of sentiment. And you have to feed the turkeys to some extent while they gobble. And here I am back from a couple of weeks away, and there's lots of gobbling turkeys around. So I'm more than happy to feed and just take some profits in the gold sector.
There's still a risk that this inflation that's picking up because of the tariffs starts to embed itself more. And if that's the case, that's something that investors try to hedge by holding more gold. So if they want to hold less US treasuries because they're worried about inflation, they tend to hold more gold, and that tends to put upward pressure on gold prices as well. So those two forces at least. I mean, the other one is a move into gold as some investors globally are moving away from US denominated assets. And so central banks, for example, have been accumulating a lot more gold in recent times and building up their gold stocks. So I think gold is well supported.
And that is your IG macro intelligence for this week. We'll see you next week.